that means we are live here on our YouTube channel with our halftime report from Tackle Trading. This is Coach Tim. We got Coach Matt and Coach Cody. And too bad we had to go live here. We just about solved all the political issues of the entire world just in our pre-show, Matt. I got to tell you, we try.
We have Tim. Do you got video today?
No video? Oh, let me see. I do.
There we go. We have about a 15-minute. We get on about 30 minutes before the show, and typically we're supposed to be planning what we're going to be covering on the show, but usually 15 minutes of that is pure political conversations where we cure all the world's problems in 15 minutes.
Yeah, we almost.
And we really should just record that and just send the transcripts to everyone in Congress, and then.
I might be a little more cautious about the things I say in that conversation.
Yeah.
No, you know, Tim, I wanted to start today with the conversation of the central bank and the Fed. And because something, in my opinion, very importantly happened yesterday. And, you know, it was fascinating to watch Jerome Powell give that speech yesterday. And I would strongly encourage everybody to go Google Jerome Powell's speech yesterday, because he made a couple comments in that speech that I don't think we were ready for from a market perspective, nor from an economic perspective, but I'll get into that here in a second. The central bank, through Jay Powell, yesterday announced him, and you tell me what this is, okay? I'm just going to tell you what he said. You tell me what it is, okay?
Mm-hmm.
They're going to add to the reserves, right? Now, mind you, it was only a year ago that they stopped contracting the reserves prematurely. And now they're going to start adding to the reserves that they have, their balance sheet. They're going to expand their balance sheet. They're going to buy U.S. Treasuries through expanding the balance sheet. What is that historically? What is that historically called?
Well, there's been a phrase in economics called quantitative easing, where they use the balance sheet and the tools of the Fed to kind of, you know, be accommodative in the economy and try to get it to inflate itself a little bit. Yep.
Yeah. Okay. So, but he says it's not QE.
What does he call it?
He doesn't call it anything.
So there's no name.
No. This is not QE. We're just going to add to the balance sheet by increasing our reserves through buying U.S. Treasuries. That's all we're doing, even though that's the exact same thing they did in quantitative easing 1, quantitative easing 2, and quantitative easing infinity, which was quantitative easing.
We don't know
3.
what it is, but it's not QE.
No, it's not QE.
It's not QE.
Everybody say it with me. It's not QE. Okay, just keep saying it. It's not QE. As long as we say it enough, it's not QE. Well, Tim, I wanted to start by just, you know, informing our team what is QE and the typical impact to the marketplace. Now, QE is typically only supposed to happen, Tim, when we're going through tough economic times, right?
That's the idea, right? I mean,
that's the idea.
Yeah.
Okay. It wasn't like the Fed was doing QE up here at the top of the 07 market, right?
And let me ask you,
you're
more of a historian when it comes to the Fed than I am as well, even though I track the markets every day. I'm an expert in all those things and even money, but I think you know more about the history of it. Let me ask you, when did the dual mandate come out? Is that an official thing with the Fed where they're supposed to?
The dual mandate came out 100 years ago.
So to keep inflation in line and keep employment in line.
The dual mandate was part of the original Fed creation in 1913. It modified its mandate in the 1930s when we went through the Great Depression, and that's when John Keynes came in and Keynesian economics started happening. And so it has modified throughout the years, but the dual mandate of maximizing employment while stabilizing prices, i.e. inflation, has been a part of the Fed creed from the very, very start of the Fed creed. Now, I just want to try. QE, though, was a creation not out of the U.S. A lot of people don't know that.
Mm-hmm.
QE was a creation out of Japan. In 2001 through 2006, the Japanese central bank launched QE. Now, in Japan, QE is a little bit different. In Japan, QE was not just buying Japanese treasuries. It was buying Japanese equities, Japanese property. I mean, you name it. They were doing anything they could to stave off that stagflation situation that happened in the 80s and 90s. Go ahead, Cody.
The same Japan that has 200% debt to GDP.
250%.
Oh,
okay,
excuse me. Okay.
Them.
Okay,
they worked hard on that. They worked really, really hard to get their debt to GDP where it is at 250% of their GDP. And so that
I just want to make sure there wasn't a different Japan out there somewhere that has a good idea.
It's the same Japan who had the same horrific monetary policy that led to 35 years of stagnation. Yes, it's the exact same Japanese economy. And that, for the love of God, I don't understand why that is our economic system that we're trying to become, but that's what we're doing. QE, therefore, was created in 01. And then in 2008, when right here, okay, coming into here, right here, when you saw that 30% dip in the S&P and the financial sectors were going away and Lehman Brothers is collapsing and Goldman and Bear Stearns was already collapsed, but the other banking systems were literally collapsing in front of our eyes. Well, the central bank looked at the historical example of Japan and they said, okay, let's not just go to zero interest rates. Let's not just do Keynesian economics through the bailouts. Let's also do quantitative easing, because when we went to zero interest rates here and we went to the bailouts here, it didn't fix the problem. You started seeing the price depreciation happen again. You started to see the sell-off start to create a lot more velocity. And so it's right into this range right here where the Fed comes out and says, okay, hold my beer, watch this. We're pumping 1.7 trillion of new US dollars, and we're going to buy US Treasury notes to drive the interest rate into a negative territory. And that's when you started seeing this bull market just start to go up, 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 up. Now, the first round of quantitative easing, Tim, was $1.7 trillion of new money buying US Treasuries. Now, the way it's supposed to work, and this is very important, is as we buy US Treasuries, buy US Treasuries, buy US Treasuries, it expands the balance sheet, lowers the interest rate. And as the interest rate is now going lower, those bond traders have a thirst for yield that they're going to go into the equity markets to get their yield. Because if they're not making any money in the treasury market, in the bond market, they're going to go find a riskier asset, i.e. stocks, to go invest in. And all of a sudden you just see boom, 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 and you start to see that massive rise. Well, right here, coming into April in the summer of 2010, you saw a 10% decrease in price. Well, it's actually about a 14% decrease in price. Well, at this point in June, right here, Tim, in June of 2010, the Fed says, well, we were kidding. We weren't ready to end it. We can't take the volatility. And so we're going to come in with a new round of quantitative easing called quantitative easing 2, where we're going to expand the balance sheet by buying US Treasuries with it. Okay. Now what happens? The market says those whiny little babies on Wall Street, they got their wish. They got $660 billion of fresh new greenbacks, Tim, fresh new money to come into the market with massive stock buyback programs. And what does the market do? It goes up, 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 up. Right here in June of the following year, they end quantitative easing 2. What happens? Massive sell-off in the market and a 18% clip in the S&P 500 once they ended quantitative easing. Well, as those whiny little babies on Wall Street were throwing their temper tantrum because they weren't getting their free money. And literally, guys, there were people, Wall Street traders, Wall Street bankers, driving their Lamborghinis into work with the license plate that says, thanks QE. I'm not kidding. Thanks QE. Free money coming into the market. Well, what happens here? The Fed's not ready to announce, and they have zero interest rate environment throughout this entire thing. Coming into August of 2011, they announced Operation Twist. Now, what is Operation Twist, mind you? It is a Vietnam military operation. That's what it technically is. But in quantitative easing history, it is the reshifting of the balance sheet. Like basically, they were doing covered calls with bonds. They were buying 30-year notes while selling 2 and 10-year notes. And then what they started doing with the dollar swap was basically gift wrapping trillions of dollars in fresh minted U.S. currency to their brotherhood of the European Union and the ECB, and to fix the European liquidity crisis. And when that didn't fix the problem, then right here, they announced quantitative easing infinity. Now, mind you, what is infinity? Infinity is they did not put an expiration date to their quantitative easing program. And for the following 3.5 years, up until December of 2015, you see the market, boom, 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 boom. You see the market just bullish, 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 great buying opportunity. And then in 15, late 14, they started tapering and they ended the program in 2015. Okay. And that's when they started doing their interest rate cycle. They had fixed the problem in their estimation, not the economy. They had fixed the market problem. And as you can see, the expansion here. Now in 16, 17, coming into 18, they start increasing the interest rate. They started decreasing their quantitative easing program. And now we come here to right here, and we come here today. They made the exact same announcement yesterday that they made in 08, 09, that they made in 2010, that they made in 2011, that they made in 2012 through 2015, but it's not quantitative easing.
Yeah, I didn't
right?
want to call it that. Yeah.
Okay. But my thing in here, what was interesting for me is this. In every instance that we have announced quantitative easing, the market response has been swift, and it created long-term trends in the market. It was buy, no sell, destroy the bears. And yet the market yesterday did not react. It did not respond. It did not have that same reaction that it had in 08, 09, 2010, 11, 2012 through 2015. That to me is extremely telling. And I said this in 2011, Tim. If the Fed's going to do another round of quantitative easing, they're going to have to double what they did originally. And so when the Fed simply announced that they're going to start quantitative easing, it's not enough to hold up this market. Not in my opinion. Mm-hmm. It's not going to work this time unless they just go full on double barrel shotgun, modern monetary theory, and pump another $10 trillion of new money into this system, which would threaten the entire value of the US dollar. So in my estimation, something very, very fundamentally important happened yesterday, and it changed the dynamic to a certain extent based on what I'm seeing in the marketplace. And the response to the market is, well, those whiny little babies want a little bit more. And so what Powell also said yesterday was, we're hinting of another rate cut. It's not there yet. That's what he said, but it's going to happen. Now, Tim, why do you do quantitative easing? Because the economy is struggling. That's why.
Yeah.
The global slowdown is real. That's why. The Fed is showing you their cards, guys. A recession is happening. It is coming, and we need to get prepared for it. And for me, I'm excited. I'm excited because this market is not the real market. We have manipulated this market to such an extent that, and I told Cody this yesterday in a conversation, at some point, we have to have an honest conversation with our country.
Yep.
At some point, we have to have an honest conversation that these types of policies, although in the short term can have a positive impact, in the long term, historically, are destructive to national economies and national currencies. And so, to me, my little fiscal hawkish heart cried a little bit yesterday. But it is absolutely fundamentally the exact same policies of quantitative easing, regardless of what the central bank wants to say.
Your fiscal heart has been dying the death of 1,000 paper cuts for 12 years. So yesterday was just another one of those little jabs by the Fed, reminding you that they're going to keep printing money forever.
We're going to do quantitative easing before we cut interest to zero?
Dude, I mean, they have a real risk, though.
Is it that bad?
Well, I got to tell you tell me what the economy would look like if they went through deflation. If people out there who are not saving, the savings rate is less than it's been in 30 years, actually saw the value of their homes contract by 10%, Matt, where would the economy be? Deflation is the biggest risk for the Fed, and they know it, which is why they're willing to use these tools forever. Modern monetary theory is in place. It is not a debate in politics. It really is happening.
We see it politically between the right and the left debating modern monetary theory. And my stance on it the entire time is, what are we talking about? We're already there.
Yeah,
we've been there for 10 years. We've been in a corporate socialist environment for over 10 years now.
Everyone that asks what happened to the Republican Party screaming for fiscal conservative policy.
There is no conservative
party. The reason it's
anymore.
not there anymore is because we're at MMT. We're at modern monetary theory. Do I agree with it? Not necessarily. As a matter of fact, I feel like when I realized I was a hawk and I grew into my stock trader self, there was someone there just smack me on the head and be like, no, you're not.
I want to ask you guys a question, though. Okay, I want to ask you guys a question.
Okay,
there are other alternatives to quantitative easing. If you have a deflationary environment, there are other ways. Okay, so let me ask you a question. Let me ask you two a question. What would have a greater impact if we, instead of if we're going to apply modern monetary theory, right? If that's what we're going to do, and again, I disagree with it, but if that's what we're going to do, instead of quantitative easing and bailouts and repo actions that are all corporate socialist, whiny little baby type stuff, instead of doing that, what if you did what Milton Friedman said? Milton Friedman, the amazing economist, said this: instead of doing QE, why don't we just fly helicopters around the cities and drop cash to the people? Now, obviously, he's not talking about just doing that. He's talking about giving people money. So instead of giving the corporations money, banks money, those repo actions from 2 weeks ago, instead of doing that, why don't you cut every American tax-paying American a check for $10,000? Well, what Friedman argues is that if we did that, two things would occur. You wouldn't have the imbalance of the money supply problem that we currently have today, where a very few percentage of the US population controls the vast majority of the supply of money. So it would fix the distribution of money supply in America. That's number one. Number two, what do we know about consumers? You give consumers $10,000, what are they going to do with it?
They're going to go buy a new truck or car.
They're going to go buy something,
bag or something.
Right?
So the money's going to quickly shift back into.
So it's the debate between bottom up economics and top down economics.
Sure.
Okay.
Sure. Yeah.
The corporate socialist whiny little babies say, give us all the money, and then we're going to increase, wages and all this. And we know that doesn't work because the whiny little babies just hoard it. They're like my grandmother in the 1930s, hoarding everything. Right.
1930s, forget that. 1980s. She took that mindset through her whole life.
No, you're right. As that woman, but it was created in the 1930s.
That's right.
That scarcity mindset.
Yep.
So instead of those whiny little babies just giving gift wrapped all the money, well, let's give Blake $1,000. Let's give Blake $2,000 and Adam $2,000 and go spend the money. Go buy an iPhone. Apple gets the money at the end of the day. Google gets the money at the end of the day. The car company gets the money at the end of the day. But you don't have to bail out General Motors. You don't have to bail out AIG. You don't have to bail out all of those Sallie Mae and Freddie Mac and all that jazz. And my point is, it creates velocity of money. And that's one of the most important principles in economics is velocity. Money has no value. Money has zero value unless it is utilized. And when the whiny little babies get their money for free, it creates zero velocity to the money. Now, as a conservative individual and a hawk, I would do nothing like that. But to me, when you're looking at those alternatives, helicopter money makes more sense to me than quantitative easing because it would create velocity.
Click the link I put in the chat.
What about tax rebates?
No. Hold on, time out.
Yeah, Matt,
click the link I put in the chat in Zoom. You got to just trust it, Matt. Trust the process. All right. There's
you're taking me to zero hedge.
There's an image that.
Yeah, that's a good image. That's a good image. Good old helicopter ban.
Yeah.
Van Bernanke. But see, Milton Friedman would say you do this over where people live. See, where helicopter Ben's doing it is doing it over Manhattan.
That's right.
There's a difference there. But you got tax rebates, Tim. But here's the one thing that I would do. Okay, if I was president for a day, no, I take that back. If I was dictator for a day and I got to do whatever I want
for one day.
Okay. First of all, I would end the Fed. That's what I would do. Number one, the Fed is not our friend. I don't care if Jay Powell gives a speech every day saying he cares about the people. Obviously, with what he did yesterday, he does not. He is destroying an entire generation of savers. But if I wanted to fix the problem of an economic problem here, and to create stimuluses to get consumers to buy more things, give us a damn infrastructure bill. Stop the bullshit of quantitative easing. Stop the nonsense of corporate socialism. Stop gift wrapping trillions of dollars to those whiny little babies on Wall Street and give us a massive infrastructure deal. Put people to work, give people a job, improve our economy through infrastructure, both digital and physical. That cures the problem. None of this other nonsense works. Anyways, that's my soapbox. I had to say it. The Fed drove me crazy yesterday.
I love it. I mean, the reality is we're hearing this nonsense all the time. We're going to get the minutes out today, Matt, from the Federal Reserve's most recent meeting. They've got a meeting later in the month as well. And by the way, after Jerome Powell's testimony,
Buddy is 100% correct. He says that is the reason we are not getting inflation. 100%. You are risking deflation and stagnation because those whiny little greedy little babies on Wall Street and corporate America can't run a legit business. And that's the truth. It can't run a legit business. You want to see inflation? You want to spur growth? You want to spur demand? Get people more money.
Yeah.
Give them a job, improve the infrastructure, and you're going to hit your inflationary target in that capacity. We saw that in the PPI report literally this week as well.
But I don't know if they have control at this point. I mean, it's gotten so far out of hand for so
Bullshit.
long. Nonsense.
Nonsense. That is an excuse the people say because they're given the excuse to the central bank say, oh, we're already so far down the rabbit hole that we can't do it. Well, let's just give those drug addicts some money, more money, and that's going to fix it. No, we got to taper it off it. We got to taper off it and get back to legit economic principles in America. And somebody has to stand up from a political perspective and show some damn courage and say we have to have difficult conversations.
I agree. I love it. You're getting me fired up here. Too fired up. All right, let's break down the markets one step at a time. Then we'll
I think I figured out what I'm getting you for Christmas. Nice, well-constructed wooden.
I want a Trump bobblehead doll.
Get him a rocking chair. You're the old guy on
Trump
the
can yell at each other all day long. Just give me a bobblehead doll. Knock and we'll yell at each other.
Okay, I can definitely do that. I was gonna say I was gonna get you a nice wooden soapbox to stand on. Just
that'd be great.
Give me. I want 1950s type soapbox.
That's what I'm saying, like an old school soapbox.
Old school. That's right, baby.
That's right. That's right.
Listen, I get it. Okay, people get sick of talking about the Fed, but we have to be aware of these.
But it's important.
They have an impact.
Well, no, I don't get sick of it. I don't get sick of it at all. Here's the reality. The reason why stocks go up and down, crude oil goes up and down, gold goes up and down is because of the monetary policy. You never fight the Fed. It's something you have taught me over the years, Matt, and I understand it 100%. You don't fight interest rate.
They have money and guns.
They're the ones in control because they set the dynamic for institutions at the highest level. If you want to know why the stock market doesn't crash, it's because they're creating all of this money and they're just throwing it in there, disincentivizing savings and other interest-bearing products.
Then the question is this. Do you continue to put more cards on the house of cards when you know it has no foundation?
Doesn't matter what I think. That's what they're going to do. I'm going to tell you.
I get that, but that's not the right thing to do. And the way they get away with it, but Tim, the way they get away with it is people like us. We were like, well, what are we going to do about it anyways? We're just a little fish in a big pond, and so let's just give into it. No, we have to make sure more people are aware of these ridiculous and dangerous monetary policies. And the Fed is not our friend. They are not our friend. They are not there to support us. They are owned by 5 very, very wealthy families that only care about themselves. And I'm just sick and tired of it. I'm sick and tired of people just turning a blind eye to it, saying, oh, well, they're going to do whatever they're going to do. That's not what the great protest of the 1960s said. They didn't say, well, they're just they're just going to do whatever they want to do. So let's just shut up and do whatever. Let's just dance the dance, right? No, we have to be strong on this, and we have to make people are aware of this. And I'm so frustrated and sick and tired of these monetary policies and economic policies that are just targeting the ultra wealthy 1% and they're stealing on the backs of hardworking Americans. And it's the time it has to end, and it has to end only more people become aware of the problem.
Yeah. Yeah, I agree with it. But the solution for individuals is always the same, Matt. You got to get control of your own money regardless of what the economy is doing. Right.
Oh yeah, we'll trade the price.
Yeah, I mean, you have to. There's no other solution there. You have to be a voice when you have it, and you also have to go out and run your accounts day by day and take advantage of what the markets are giving you. That's your job. Dow, S&P, NASDAQ, Russell, they're all green here today, Matt. I'm not sure why, but they are.
Real quick.
Yeah.
In other news, China's buying soybeans.
Mm-hmm.
Okay.
Hey, Matt, that's what the market's up today.
Sorry.
Market's up because we got soybeans.
There's only.
I think that's so funny. The headline today was so funny. I just couldn't stop laughing. Market up on positive trade wins, and China says they're going to buy more food. And I'm thinking, oh, God. We have refurbished that headline of China buying more food on a positive news deal, on a positive trade deal, more times than I can count this year. Yeah. What about the other structural issues? Okay.
Don't want to
China says they're not even on the table.
No, they're not.
They're not even on the table. And I can see us declaring, like I told Cody this, I could see us literally ending this trade war by just taking a soybean deal and declaring victory here.
What's the probability of Trump actually getting a final trade deal with all of the items that are the memorandums of understanding?
It does not exist.
I don't think
no politician, no trade deal ever gets everything they sought out for when they started.
Well, I'm not saying even get everything you want. I'm saying you get a final trade deal where they're all just moving forward saying, hey, we have a trade deal in place. I just don't see
only
that
way
happening.
that happens is after 2020 if Trump is the
I don't even think it happens then. I don't think China's going to play
because
guys,
I don't think so. If he gets 4 more years to bash on him and work him.
All I know is this, guys. Trump's been tough on China. You want to know who's even tougher in policy? Elizabeth Warren.
Mm-hmm.
Elizabeth Warren is not going to be kind to play with as president of China. I can tell you that right now. So I don't think it's even the next 4 years.
Maybe not China, but one thing Trump has even had, his own party hit him on it. But man, that dude takes a lot of crap that I don't know if many other politicians could take that crap before they finally yield. He's taking crap for 3 years now.
Well, some of it's justified there, though, Cody.
I mean, yes, but you add in the same, like you look at other politicians, and with the trade, they may be tough, but how long could others stand up to the pain of the economy?
Somebody has to stand up to China, and I'm glad.
I agree. Someone does.
Yeah, yep, I'm glad. I just don't see there's going to be a conclusion here on that. On that.
So now, the soybean buying is not a conclusion. Yeah, no, you can, and we have them all the time, Matt. That's what makes these markets so volatile and also neutral.
That's what Cody was saying.
Yep.
Right. I think that's what Cody was saying was, no, nobody's going to get 100% in a negotiation. That's not how it works. We're going to give in on some things. China's going to give in on some things. I do believe we will get partial deals, but I don't think we're going to get deals on U.S. intellectual property, the structural issues. China will agree to buy more of this. We'll agree to buy more of this. We'll reduce tariffs, but we won't eliminate them. There's things that can happen from a partial win perspective.
Right. And not all days in the market are created equal. A 1% day where you're breaking out of resistance is very different than a 1% day on false headlines that don't really mean anything in the middle of a range. Right. I mean, this is a partial deal with the ag products and the soybean buying and all that kind of stuff. There was positive trade wins. But honestly, I wonder what it's like to be a journalist in the financial markets when you've got to just give a reason when there's not that much of a reason here why the market would either be up or down 1% today, Matt. It's neutral. It's neutral. It's backfilling into moving averages. We're finding a little bit of support on that trend line. There's nothing else there. I mean, the Dow, the NASDAQ, the S&P, they all look the same. The Russell down at support, by the way. But outside of that, markets, we're not changing our approach today, are we?
No,
not at all.
Well, no. Obviously, I mean, from yesterday to today, really nothing has happened. And that's kind of my point of my tirade earlier today is the fact that they made a major announcement and it didn't really even move the marketplace, right? You're still stuck in neutrality. You're still kind of like we talked about before, delta weighting, and you're delta neutral kind of in a portfolio and you're positive theta.
Stack theta,
You stack theta. And until we see a direction in the market, and you know what, Tim, this market could have another leg up. There's no doubt about that. There are variables to price and policies. You get an infrastructure deal, you get, more rate cuts, you get a massive quantitative easing announcement, even though they will never call it that again. But the same way they called the repo actions repos instead of bailouts, which that's what they were bailouts.
Yeah.
So in terms of this, you still could have monetary and fiscal policy come in to continue to drive the market. And the one funny thing I laughed at yesterday was when Powell was like, yeah, we're 11 years into the recovery. It didn't even take 11 years for the Great Depression to recover, Tim. We're 11 years into the recovery, and we're still going to continue to do what we can to support
by data, this has been the slowest recovery in history. It has also been the longest run, so this might have just been a slow
recovery
run.
in the economy, right?
Yeah,
in the economy, not in asset classes, not in real estate asset property values, stock values, and whatnot. But yeah, you're absolutely right. And from an economic perspective,
and I've thought about this because I've studied the market cycles and things, and I've tried to figure out, how is it that it usually goes, you're 7 to 9 years, and then all of a sudden we're pushing 10, maybe pushing 11. It's like how, and I think it might have been because of the rate of recovery might have given us that extra time. That's why I bought this on it.
Yeah.
Well, I mean, whatever it is, I've said this before and I'll say it again. I don't want to start another argument here, but I do think without the trade war and all this news, I think the market would be at 3,300 on the S&P. And I think we would have been 10% higher because we wouldn't have had the volatility over the last couple of years. Modern monetary theory has been working in terms of asset prices. It doesn't work in terms of economics. There's a difference though, Matt. You even just said asset prices have recovered very, very quickly, because when you push this much money in, it's going to make real estate go to an all-time high. It's going to make stock prices go to an all-time high.
But
And
if
there's
the dollar's
nothing in the
losing value
logic.
at the same time, then it doesn't make any sense. If
Which
your dollar's
means-
worth half as much, but your house is twice as
Betting against higher prices right now when they're printing money and flooding the market with money is going against history too.
Well, and it's going to exacerbate the problem I talked about of velocity, because Tim, not everybody participates in the financial world.
That's right.
Not everybody is an investor.
Yeah.
Not everybody owns, Disney stock and Apple stock, and they just don't. They don't own gold. They don't own silver. They don't own assets. They don't own property. They rent. Most of America is not the investor class. Only a small percentage of America is the investor class. And no, I do not consider owning mutual funds in a 401k to be an investor class. That is a glorified savings account.
Mm-hmm.
That's all it is. You're parking money in savings, your own money in savings. So those types of monetary theory policies, they only help the elite rich.
Yeah, I agree with that. Give me the Russell real quick. I just want to make a programming note. Tonight, we have our Cash Flow Condors Mastermind group. The daily email today at Tackle Trading was the year of the Condor, and it's been a great year for Condors, Matt, if you know what you're doing.
Yeah, I read that in the Tackle today as well today.
Yeah.
Good write-up.
It was a really good write-up, and it's been a very good system. Neutral, theta-based systems that have an edge in back testing and probability. Everybody loves them. Condors are a big part of what I do. Sitting down here near support, like we've said many times, if it breaks, I would hedge personally. I know that there's a lot of risk there in that chart, but until it breaks support, still neutral. Do you agree with that?
Well, yeah, I do absolutely, Tim. If it does break 1450 though, and I wouldn't say it's got an edge to break 1450. I think 1450 holds, but if in fact it does break 1450, managing that system of the cash flow condors would vary based on, how far you're selling out of the money. So, let's come to the Russell 2000 here, RUT, which is the symbol we do the system on. And if you're looking at this, let's say you're 36 days out in the condor, Tim. And let's say you originally had sold, you originally sold the 10 Delta contract, but now it's a 30 Delta contract at 1430.
Mm-hmm.
You would have to manage that.
Yep.
No doubt about that. But if you sold this just recently and you're like, say at the 1350, would you still hedge at 1350 versus say 1420, 1430?
I do, but when I use the word hedge, people think that means you're taking extreme actions to adjust your portfolio. No. I'm talking very, very subtle, like just moving the delta a little bit by adding a little bit of this or a little bit of that. But those are advanced mechanics I use in my own personal trading. Traders should use the system.
Simply just add a put option.
Yeah, simple put option on the legs that you own or something like that.
Yeah.
There's a million things you can do. If you're attending that mastermind group tonight, remember it's 7:00 Eastern tonight, not 8:30 Eastern. Tyler had to adjust his schedule, so just make sure you've got the right time when you're popping into that mastermind group. US dollar has been going up. Gold is flat. Oil is flat. I want to look at all of them here real quick. Dollar, even in the face of all that QE stuff and all that Jerome Powell stuff, is still going up, man. It's just a better currency against the other trash that's out there.
It's just a race to the bottom.
Yeah.
Right. I mean, that's one thing some people don't understand about the dollar here is like, well, if we're going through if we're lowering the interest rate, increasing money supply, if we're announcing quantitative easing, increasing the money supply, increasing the balance sheet, well, what's going to happen? Right. What's going to happen is the dollar should go down in that environment if the only thing you're looking at is the dollar.
Mm-hmm.
But again, the value of a currency doesn't just impact the monetary, policy or the fiscal policy. It's based on how well your economy is as well. And so if you're looking at the Europeans and they're at a negative 0.5% interest and they're going to start doing quantitative easing. Japan's been doing quantitative easing since 2001. So it's the race to the bottom, and the dollar's still the prettiest of the bunch.
Well, out of the currencies, it is for sure. I still obviously, and I think you'll agree with this. I love gold right now. And if you think about it, if the dollar had gone down this year instead of up, where would gold be? Gold's had an incredible year, and it's even running with the dollar. If you think about that, crude oil had inventories today, but let's take a look at gold first, if you can.
Yeah,
and silver. Neutral and short term, Matt, but as the dollar's doing its thing, it's still holding up and kind of staying where it is. I'm still long term bullish, short term neutral.
Yep.
Me too.
Yeah, but yeah, I mean, you have to give gold some credit for the resiliency it's had at 1,500, with the dollar being as strong as it's been over the last 2-3 months. Gold's really held those channels at 1,500 very well, very well.
Yep. Crude oil, next one. We're going to get a CPI.
Inventories.
Yeah, CPI report tomorrow, but remember, it doesn't account for energy prices. Crude oil is sitting here at the bottom of the range and near support, trying to hold up. Matt, if you had to gun to head, like you always like to say, support going to hold?
Yeah,
I think so.
I'm going to bet on support here.
Yeah, I think so.
It's ever since right here, 15th of January, right here, right there, right there, right there. Mm-hmm. So look at the volatility here, T. Look at the speed. Look how just vicious that move in oil was. Look at that move in oil. Look at this move in oil. All have very similar traits. Mm-hmm. They're falling knives, right? And where did they fall down into? The significant whole number of $50 to $51. So gun ahead, does it hold? Yeah, it does. Now, if it doesn't, if you have bear calls underneath that 50 level, you got to manage those.
100%. Yeah, that's where my head's at as well.
Tim, sometimes we talk about managing trades like, oh, let's add a put option to this. Let's, add another bear call. Let's, add whatever the management technique is. Some of the best decisions you can make is just to take the loss.
Yeah, a lot of traders have a hard time with that. They have a hard time taking a hit when you have to build that skill set. I mean, over the course of a year, you're going to take hundreds of trades if you're an active trader, right? If not more or less, but you can take a lot of trades. And if you can't take losses, you're going to be in trouble. There's no doubt about it. Got to get rid of losers.
Well, in the inventory report, we did see an increase, correct, in supply?
Yeah, and Lewis brings up a good headline. We talked about this in the pre-show, Matt. Turkey, obviously, they did invade Syria today or last night or whenever that was. Yeah. Do you think that has risk on oil here, to the upside, downside?
More to the upside.
Yeah.
I mean, if we see an increase in tensions in the Middle East,
stability in that region,
price appreciation, right?
Yeah.
So that should give it a little bit of credence on price appreciation. The inventory buildup that we saw in the oil inventories today wasn't bad. It was like 2.9 million barrels.
Yeah.
I mean, the expectation was 1.7, 1.9, something like that.
They were supposed to build 1.8. They drew 2.9. So,
okay, so they drew 2.9. So obviously, slight bearish data, obviously, but offset. Lewis is absolutely 100% right.
Yeah.
The Turkey's move offset that. But even with that buildup, I don't think oil would have sold that aggressively on that. That's not a bad number. It's not. No. That's not a. I mean, we've been tracking that report. That report's typically off by 6 to 7 million barrels.
Mm-hmm. Yeah, I agree with that. Give me a quick look at Bitcoin and natural gas in either order that you want.
Bitcoin jumped.
Bitcoin's having a nice day here today, 5.7%. It was kind of flat for a couple of weeks. Still, in general, though, you've got old support, new resistance developing. That is not a bullish chart in any fashion.
I did see a headline on Bitcoin today, and I can't remember. It was some type of institution doubles their investment or something along those lines. I can't remember. I think most cryptos kind of jumped on the news.
Yeah, but then you also have Zuckerberg in front of the committee, talking about Libra as well. I wonder how much that's impacting Bitcoin. I mean, regulation of Libra, if that is that going to be good or bad for Bitcoin? I have no idea, but I do know headline risk is going to persist in the crypto markets, and it has been that way for a long time. Matt, that old support at 10K, if you're a trader, you would be looking at that as a new potential entry to the downside, correct?
Oh, on any type of slowing momentum, downward movement. Yeah, you're looking to short there.
Yeah, bearish retracement. Natural gas is testing support here, and at best, if I put rose-colored glasses on, I'll call it neutral, Matt. But actually, if you broke that support, not neutral. I'm all the way down at $2. Help me out
You're
with
2 by
this
1.9,
one.
right?
Yep.
Yeah, you're 2 by 1.9. 2.2 is going to play a role. 2.07 is going to play a role. I would not aggressively do anything, Tim, on this unless we get to 2.1. At 2.1, I think you have to do something.
I've not done anything yet, but definitely something I'm paying attention to. Some stocks I want to talk about here. U.S. Steel. Bring this one up if you will.
New CEO, correct?
Well, CFO resigned, and they got new management coming in, and they're going to be trying to reallocate their balance sheets and all that kind of stuff.
Right.
Yeah, they've got it.
Her name is Christine Breves, I believe. She's going to succeed Bradley as the CFO and going to be an advisor to the CEO, David Burritt.
Mm-hmm.
They did not like it.
No, they did not. This company's not had good news in a while, by the way. I mean, it just hasn't. Breaking support here today on the news, Matt, with some volume picking up. You had the gap down a couple of weeks ago.
Not yet. 10's got to be broken.
Yeah, we're at 10.09. Yeah, so a close here. So we'd have to close below 10.
You'd have to close, but more than likely it will.
Yeah.
Which means I'm still not divorcing it because I haven't got married yet.
I'm not.
Volatility does make me shy.
I wouldn't take this one on a date. I'll tell you that right now.
Nope. Not right now. That's pretty consistent downtrend, slowing momentum. Let's see how it behaves. But obviously, the markets don't like things like that.
No, they don't. And obviously the global slowdown and the problems in Europe that has affected that company quite a bit. They do about 20% of their business in European trade. So it's affecting U.S. Steel quite a bit. WE is actually firing a third of their employees. I don't even know if this stock symbol is legitimate. WE is what I got out of the.
No, they pulled their IPO.
They pull it off. Johnson & Johnson lost a lawsuit here, $8 billion worth. J&J is down a little bit. And, those pharmaceutical
companies. Resperdal, is that how you say it?
Yeah, and I've never know the drug. Cody might know the drug, but I think it has to do with men's something. I don't know. But
male breast growth is what it has to do with.
Well, that was the unintended consequence.
The dad bod, right? Dad bod.
Yeah.
So that was helping the dad bod become a thing.
Okay. No, it actually causes not just man boobs, but actual formation, gynecomastia of like men boobs. Are getting boobs. Yes, that's a bad symptom.
Evolution.
I don't think they were looking for that when they.
Is that called inflation?
That's.
There's too many bad jokes. We can
Is that tracked in the CPI report tomorrow?
Roku is up big, Matt. You talked about 100 holding and playing defense.
We should all give Tim a hand for how he's been trying to corral me today. That was a very difficult
He has
job
been trying. He's
been trying. He's been trying. I came in on fire, and Tim's been like, I gotta bring Matt in.
Hey man, we all play a role, right? Isn't that a Shakespearean quote somehow? We all play a role in life. Roku next is up 8%, Matt. This is one about a week ago where we were talking about, and you're like, Tim, hey, do you buy at 100? And I said, no, not for me personally.
I tried to convince you. I didn't do it though.
It's up 15% since then. I mean, 100 played defense. The weekly candlesticks look beautiful. It's on its way back up. So here's the question. I mean, when do you start getting interested in one of the hottest companies in the market this year? This stock was on fire. One of the things I track every day, Matt, it's a very simple thing. I look at the price volume leaders. Okay.
Yeah.
And usually you're going to see Boeing and McDonald's and Apple Computer and Google, the big names. Because the size of those companies when they trade 50 million shares is enormous, right? Roku's on the top 10 list every day.
It's amazing.
Why? It's incredible to me and by the way, when Beyond Meat was blasting off, it was up there all the time. It's no longer there. That's a bad sign for Beyond Meat, by the way. Roku continues to dominate here. I'm interested at some point. Now, I don't have any positions, any trades. I don't have anything. I don't know what I'm looking for, but probably some kind of breakout and new trend developing through the earnings season. What are you seeing?
I'm looking for a short-term trend to develop here to give me an opportunity to enter into a swing trade to hopefully transition that into a position trade is kind of what I'm waiting on here. No, I'm not going to buy it off that. I mean, I would have no problem with an investor coming in and be like, yeah, I like the slowing momentum. I like a stop loss under 100. I'm willing to take the risk here. I mean, Roku is one of those companies that has a path to profitability. They have a good business model. They're a competitor to the Apples and the Netflixes of the world as well. So I wouldn't have any issue with a position trader or an investor coming in and saying, I'm willing to take the risk with the stop loss under 100, because if it does break 100, I mean, these things can get pummeled down to 25.
Yeah.
I mean, just absolutely pummeled down. So, I could see somebody saying, I don't mind the cheap risk here. That's not what I'm waiting for. I'm waiting on a little bit of a trend to develop from this short-term price action to maybe get a cleaner perspective on the daily chart than what I'm getting on that weekly chart. Although Mark would probably love that weekly chart.
Well, that red candle 4 weeks ago might throw a trader off. But
I
that
can't remember what that news was.
No, I don't remember either. I think there were some downgrades in there and then just pressure. I mean, when a company goes from 26 to 176 and you lose momentum, Wall Street can punish you quickly. Speaking of which, take a look at iRobot, IRBT. I got to tell you, I've been watching this stock on the downside. It's been on my bear list and just been in a just terrible downtrend. They got a downgrade today, Matt. Now, I don't make new entries on upgrade downgrade stuff because that news usually gets priced in pretty quickly. But man, continuing to be bearish here on IRBT.
Well, so I actually think of iRobot similar to a GoPro. They went public off of having a fancy gadget. They had the Roomba, and it was the big craze. And they tried to build a big company out of it.
Is the Roomba the vacuum?
The vacuum cleaner, that's
they got popular based on that one television show.
I have a Roomba.
I mean, I have one too.
Yeah. I didn't know that was iRobot though.
Yeah. They make a lot of gadgets. They actually make a really cool thing. See, I'm a tech nerd, obviously, and they make the version of the iRobot for your lawn. You just kick it outside and it will mow your lawn.
I don't trust that.
Yeah, no, I don't either. I don't own one. And clearly,
your garden's going to be gone. The flowers you just planted are gone.
I've seen Terminator.
The robots are coming. There's no doubt about it. And by the way, guys, we're going to be here for another couple of minutes. Tackle Trading's halftime report. We go as long as we choose.
Very quickly, T.
Yep.
Okay. Levi Strauss announced earnings today. They beat on EPS, beat on revenue. They're up about 1% intraday. American Airlines also, they are, what was that one? They are extending their cancellations of the Boeing 737 MAX plane to mid-January. Another negative news for Boeing. And we've seen a couple of those headlines recently on Boeing. Hasn't really impacted the price. Let's see. Also, Domino's Pizza was downgraded as well today as well.
And Delta has earnings tomorrow morning, I believe.
Delta, Tackle 25 stock, Delta.
Definitely a good airline company from a long-term perspective. It's been under pressure this quarter. Quarterly earnings are going to be important. Decreased oil prices in the short term don't necessarily help these airlines, Matt. A lot of these airlines, they buy their fuel out years in advance. They're locking it in anywhere in these 50s. We'll see if that actually makes an impact.
We saw that in a crash of 14 and 15. That's when we started seeing how much they do this. Yeah. And those airlines like Delta and American and United, Southwest doesn't trade the futures market, but those three airlines, despite oil crashing, which usually helps airlines, right? They took a beating.
Yep.
Just a beating. We would tell the joke, they need to hire real traders.
That's true. That's definitely true. Cody, you had some stuff prepared here today. I want to give you the floor here for about 5 minutes probably. And you got some quiz questions. Is that right?
Yep. So today's fun segment is really just a trivia, a couple different questions that I found all around. I was trying to set something up with like a who am I, but then I figured that if each of you have the who you are stuck on your forehead, that you can just see your own camera. And I was like, that won't work. So I'll figure that one out later. So what I did today was just a couple of trivia questions. Some of them more of just interesting facts that I thought, even if you get them wrong, then we could just kind of talk about it because I think they're kind of cool. So I put together, there's about 6 of them or so. And whenever you guys get started, I'll keep score. But because, like I said, it's more of just a conversational fun fact thing, I think It doesn't matter.
The only time we ever keep score for winners and losers is when Mark runs the games for some reason.
He has to have a winner.
He has to. He just has to. All right, Cody, go ahead.
All right, let's start off with, okay, the Dow Jones originally had 12 companies in it. How many of the original 12 companies are still part of the Dow today?
Oh, dang good question. In some form or fashion, they could have evolved, they could have adapted, but I'm going to say,
I'm saying zero.
I think one.
It's one.
U.S. Steel, right?
No.
American Express.
General Electric.
GE. There you go. There you go. I think U.S. Steel was in the Dow. Maybe not.
I have the original 12 here. The original 12 were American Cotton, American Sugar, American Tobacco, Chicago Gas and Drilling, Cattle Feeding, General Electric, Gas, Natural Lead, North American,
commodity.
Yeah, commodity. But U.S. Steel is not in here.
Interesting.
U.S. leather and U.S. rubber.
There you go.
So, yeah, thought that was a cool one.
General, nice.
Who founded General Electric?
That's a good question. Is it who's the guy from Pittsburgh? I don't.
I'll give you a hint. He's famous for a key and a kite.
Oh, really? No. Key and a kite. First of all, that's no, Ben Franklin. Ben Franklin did not found a key and a kite.
Thomas Edison is who I was thinking of.
That's
Thomas Edison. I did not know Thomas Edison founded GE.
Thomas Edison.
Tim, is Thomas Edison crying in his grave for what that company has become?
Maybe. I mean, that guy, he's got a very interesting history if you look into it. He was actually very deceptive with his investment practices. He stated a lot of false earnings to make that company look better than what it was. So he might actually be very proud about what
he was very proud of General Electric. So
General Electric's
founder. Okay. Oh, him and Tesla, not the Elon Musk Tesla, but Nikola Tesla, like genius. They hated each other.
Oh,
They were going toe to toe all the time with, the incandescent bulb versus the fluorescent. Really fun history.
Yep.
All right. This kind of has a little bit of a founder's theme. So I'll ask another one. Alexander Graham Bell, the inventor of the telephone, offered his invention for, I think it was $100,000 at the time, to Western Union. They told him, no, it's not going anywhere. Western Union told him.
Well done, Western Union.
He then
what that reminds me of, Cody?
What's that?
You know what that reminds me of? When Yahoo had the ability to buy Netflix for $1 million back in the early 2000s.
They said no. So Alexander Graham Bell then went on to found his own telecom communication company. What was it?
Ma Bell. AT&T.
AT&T,
which is currently the largest telecom company in the world.
Yeah.
He would have just sold his invention to Western Union and walked home and been like, I'm a great inventor.
Western Union
said, no, we don't want your invention. And now what do we know Western Union's for? Not much.
And now AT&T, even to this day, pays like a 5.5% dividend. So
that's like GameStop saying, no, we don't want to buy Activision.
I like it. Okay.
I like it.
Okay. True or false? There are more than 50 stock exchanges across the globe.
True.
Well, let me think. It's got to be true.
It's true.
There's
only 16 though have market caps over $1 trillion.
Really?
So there's 60 exchanges total, but only 16 are the big ones we think about.
All of them modeled after New York.
And ours dwarfs theirs.
Yeah.
Yes.
Well, we exported our financial system. I mean, that's one of the things that the U.S. has done in the last 30 years that has made a huge impact on the globe. 14 of the biggest 15 financial institutions in the world are in the U.S. I mean, that is really the control the U.S. has. Everybody thinks about the U.S. military. It's the U.S. financial system, which is probably the most powerful thing.
The U.S. military backs our U.S. financial
100%.
System.
I get it. They go hand in hand.
America.
America. That's right. That's right. Yeah.
All right.
We're not the brightest. We're not the smartest.
But we can hold our own. Best. We can protect it.
But we're the best.
That's right. That's right.
All right. According to efficient market hypothesis, technical analysis is worthless. True or false?
Yes.
I don't think that's true. I think that they carve out some exceptions. I think it's that's a false statement.
No, it's true.
It's true.
I thought you were trying to trick me. I thought you were
efficient market hypothesis.
How I lose the games.
Everything is taken in on its own, independent of any human emotion, and there's no way that you could ever know the direction of a stock. It basically says technical analysis is fugazi. It's nothing.
They say everything is fugazi, though. Like everybody should go duck their head in the sand and do nothing.
Efficient market theory is for lazy academics who don't want to put the time in to recognize why they haven't made a lot of money. It's for the Keynesians who are bad investors, Matt, who don't actually have good returns, and they want to make excuses as to why they're not rich and they're so damn smart. Guess what? Maybe you're not that smart. Okay. So
amen, brother.
Yep.
Amen.
All right. Let's see.
Mini soapbox. See, you had
I had a 14-minute one. That was a 14-second, but I gave you an amen.
All right. So I already asked this one in pre-production, but I think it's interesting. I don't know if this takes into account stock splits or anything, but what was the lowest price Apple ever traded?
Yeah. Well, we already know the answer.
Let's hear some
let's see if our students know.
Let's see the team. Hey, team, what was the lowest price Apple ever traded?
And don't look at my guess. Like, take a guess.
My guess was $1. That was my guess because I knew it traded for $1 after the .com crash. So that, James, I had the exact same response you did. But Cody, what was it?
It was 26 cents.
I was shocked by that.
1985, 26 cents Apple.
Could you imagine investing just 100 shares? The return on that,
Jesus,
after all the splits, because it's not 26 cents to whatever Apple's price is today.
Yes, that's for the splits.
That's not it. That would be worth millions of. Oh my God! Wish I could be a fly on that wall in '86.
Yeah. When I was kind of doing some research on it, and I was looking into Steve Jobs, and he went. By 23, he was a multimillionaire. By 25, he went from like $3 million at 23 to they estimated his net worth was around $250 million at 25 years old. And it's like, holy crap.
Yeah.
Like,
well, I think that, Cody,
and guess what? He didn't go to college.
Well, and he didn't quit.
He was a visionary.
You know, the amazing thing about some of the greatest entrepreneurs, it's not about just making a lot of money. I look at that with like the Elon Musks and the Steve Jobs and the Mark Benioffs and all of them, Matt. They've all had stories where they had hundreds of millions of bucks in their 20s, 30s, whatever it is, even 40s. And they could have stopped working forever and they went out and built even bigger things. I mean, there's a huge lesson there in life, right?
Well, like Elon, one thing I love about Elon Musk is when he cashed out of PayPal with 180 million, he didn't go out and spend lavishly and buy cars and boats and houses and vacation homes and live that luxury lifestyle. And he could have lived his life.
He said, we're going to Mars.
He said, we're going to go and I'm going to put every single penny of that 180 million into SpaceX, into Solar City, and into Tesla. And that's I look at somebody like an Elon like that, and I have mad respect for that. That's why I became a fanboy, is just everything he did. Same thing with Steve Jobs. Steve Jobs, one of the most amazing visionaries to ever exist. I mean, a lot of people don't remember that he was kicked out of Apple. I mean, he was kicked out of Apple, and only after Apple started failing did they bring him back. And he came back and said, well, I'm going to create this smartphone. And everybody's like, no, you're going to fail. Nobody's going to use that. And yet it changed society. It changed life. I mean, same thing with Benioff and the internet in 95 and 96. I mean, great entrepreneurs stand up and do something in the face when everybody else says no.
Yeah, 100%. Cody, I love this. I love our Wednesday rotating segments. You got any more?
No, I'm good there. But I was going to say something that was really funny when I was trying to like find some questions. And so I just like, did a quick Google search, like maybe people have questions out there already. And you're a trader when I went to this website and about half their questions were saying, what company is, this ticker symbol for? But I was reading it as the company, like it would say, what ticker symbol does NKE stand for? And I read it as, what ticker symbol is Nike? And I was like, oh, like they had so many that were like that. Like, it's like, I just read it as the ticker symbol, just, Nike.
Oh,
Yeah.
Cody, I text my wife the other day. I text her, hey, did you buy this from Amazon? And I didn't write Amazon. I wrote AMZN. And my wife texts me and she's like, what are you talking about? I'm like, oh, Amazon.
Yeah, for sure.
So I thought it was funny because I was like, oh, I couldn't even steal their questions because they don't read correctly in our brains.
Guys, thanks for being here. You know, a couple things. Number one, cash flow condors tonight, 5 o'clock Mountain, 7 o'clock Eastern. Make sure you're there and participating if you're a condors trader. The reports, stock report, option report, a lot of stuff triggering today. If you're a pro member at Tackle Trading, go review your watch list, identify opportunities that you choose to trade and plan accordingly. But there's a lot of great stuff on those reports this week. There's no question about it. If you are a member of our community, we love you. Obviously, we're here to help you. If you ever need something,
Team Tackle, baby.
Team at tackletrading.com is a great way to get a hold of us. And if you're not a pro member yet, Cody always drops a 15-day trial in the chat as well as the notes afterwards. Or you can just go directly to our website and sign up. There's a trial form right there in our store. I got to catch a plane here in about 3 hours, but
you're gonna go teach for Legacy, right?
Yeah, Denver? Going Denver, Colorado. Yeah,
nice.
Always a wonderful place to go. Yeah.
Oh, are you Denver Tech? Did you find out?
I don't know. It's c'est la vie, man. It's the way that I travel. I don't even look up the hotel location until I'm on the way to the airport. So we'll find it.
You know, I just got booked for Vegas, and I email it because we're going down to Vegas with Tackle as well, and I got booked for Vegas on the same weekend, and it's like, all right, I'm gonna go stay at your hotel on Saturday night, right? And I had to call Legacy and be like, hey, can you tell me where the hotel is? I get on the airplane, get in the Uber, show up at the event, teach, go to the airport. Yeah.
Hey, we're still live, right?
Yeah, we're still live.
Hold on. I just got to do one quick thing. Guys, I just got the schedule for the Hall of Fame event this weekend, and we have one of our students from Legacy, Matt, that is going into our Hall of Fame. Yeah, look at the bio here. Okay. Oh, I love this.
Gonna zoom in on it.
Yeah, I'm gonna get it all popped up. You know, Legacy Education is obviously one of our key partners, and we've been, they've changed my life. There's no question about it. And it's a big part of what we do through mentorship. And it's many students out there who are halftime crew. You guys have gone through Legacy programs. Here's one of them, one of your fellow halftime crew, Larry Velasco. There's Larry right there. Oh, man, very cool. U.S. financial investor. He made our Hall of Fame of trading this year. Larry. Congratulations.
Yeah, I met Larry originally, and I was his basic training instructor for Larry, and Gino, I believe, was Larry's mentor as well. So Gino's going down and supporting Larry, and I just want to tell Larry just a massive shout out from Tackle Trading. Just congratulations. It's an honor, Larry. We only induct one of our new members into the Hall of Fame every year on the stock side. And, you know, Larry, and I know some of that competition because I had a couple students I submitted. Yeah. And Larry, shout out. That is absolutely amazing. Seriously, Larry, great job, brother.
Big congratulations, Larry. Awesome. And thanks for giving back to the community, by the way. Larry is very active in our clubhouse. He answers questions. He's there to help and participate. I think it's an amazing thing. We have a real team here. You know, there's no question. Hashtag Team Tackle, guys. We'll be here tomorrow. I'll be teaching. Matt, you'll be here with Cody. And I think Noah will be here.
Noah will be on tomorrow. We're going to break down the market, have a fun market. And then Friday Fun Day, we're going to have Coach Noah, Coach Frank, and myself here as well.
Awesome. See you guys through the week.